Welcome to Warrior Money, the show devoted to supporting our brother and sister veterans in business. I'm Patrick Murphy.
And I'm Dan Coons.
This week, the return of Alex McLeod and Jay Long of Parlay Finance. They recently joined us to discuss their loan readiness platform, small business loans, and their experiences in entrepreneurship. We had so much to talk about. They are back for round two, so please welcome Parlay CEO Alex McLeod and COO Jay Long. Welcome back, guys.
Thanks for having us. We appreciate it.
All right, we started off with bluff. You got it last time. Different bluff question this time. Bottom line up front, going to you, Alex. What do young entrepreneurs need to know about access to capital?
Okay. Early entrepreneurs need to know that the first step of starting a business is not taking out a loan or raising venture dollars. Don't take it till you're ready for it is the bluff.
Yeah, listen, Dan and I, we've invested like over $100 million with our partners in venture capital to venture-owned companies. But I also read Dave Ramsey's book. Dave Ramsey, he's like a disciplined guy, and he talks about, I wake up almost every day with these great business ideas, and thank God I don't fund them. Like he goes, because most of those ideas are like dogs that cannot hunt.
Yeah.
So do you see that with young entrepreneurs that you mentor either through We're Rising or through, your business?
Yeah, I actually think as a founder or as an entrepreneur, you have to have unreasonable belief that you're going to be one of the 5% of companies that survives. So like the base case is everyone's super optimistic and super motivated. I think those that succeed are also really good at de-risking. So a question that needs to be asked is like, how well are you identifying the latent assumptions within your business model? How well are you validating that your beliefs are true? How well are you prioritizing the most critical risks to your business? And how well are you doing that as cheaply as possible? I think it's really tempting to get wrapped up into the experience of launching a company, but I think it's really powerful when you use disciplined methodologies that help you validate that your idea is sound from a business mechanics perspective. What's cool is there's great resources for that. Something we recommend often is the book Disciplined Entrepreneurship. But it's not just I'm going to sell to this group. Understanding segmentation and a really disciplined go-to-market and understanding of buying behavior allows you to channel that energy, those many good ideas, to find the one that's right and then go to market with that.
Yeah. I love what you just said. And I think the early stage is about proving yourself wrong as quickly as you can, as many times as you can. Because we come in, our first idea for Parlay, our business, is not the one that we're doing now. It is very different. Same mission, but the application completely different, because we came in with a hypothesis that a certain group would pay us for the software that we've delivered. And then we learned that they needed something else. It was a different group. They needed to pay for it in a different way. The value proposition and the ROI was different in their minds than we realized. And so all of that work, you have to do that iteratively. You have to do it, by proving yourself wrong time and time again until you know that you've got a solid foundation from which to say, okay, I know the business model. I know how much people would pay me. I know when they would pay me. Very important. I know what I'm going to need to get to my first milestone, et cetera, from there.
Yeah, one of the really hard parts about starting a business is, and we've learned about
so
this.
Many.
I think one of the really hardest part is I have no money. I have no access to capital.
Yep.
I've got a good idea. How do I find a customer? Like, how do I get to either revenue, or how do I get to the idea of revenue fast enough for somebody to actually help, like the old fashioned way, pay for the thing that I'm going to go do first? The question I have for you is, how did you get your first paying customer? Like, how did you do that? Because it's such a hard and important first step for so many folks.
Yeah. The short answer is it took us a while, because we came to the market and we said, okay, Parlay, as a quick recap, we're a loan intelligence system. What we do is we offer a piece of AI-powered software to banks and to credit unions that are serving small business customers, small businesses that are coming to that bank or credit union and requesting a loan. And so initially we said, okay, we think that these banks and these credit unions need a method to efficiently assess this piece of the puzzle. And then we went and talked to 200 banks and we said, what's the problem that you have in this dynamic between the small business and your loan officers and your lenders? And we did not lead with what we thought the problem was. We had to hear it from them. And then they would answer different ways, and that would teach us one of two things. Either one, it's the wrong customer, or two, they don't have the problem we think they have. And then if we did find that problem, then we would ask them, okay, if we solved it for you, how much would you pay for that? For us to solve that problem, for it to go away, et cetera. And then iteratively, that took maybe 8-10 months to really get right in the beginning.
I would almost argue you're never done.
No, you're never done.
And
That's
so
true.
like as you build more and learn more, your position or hypothesis becomes more advanced, but the new frontier of your limit becomes where your learning drives next. So I think there's a lot of power in making sure your company is designed to be really rigorous about learning what is real, not what you want to hear. I want to give shout out again to our CTO, James Cho here. He's really disciplined about, there's a book called The Mom Test, the art of listening so that you drive learning and not that you reinforce biases that can potentially distract the trajectory of your business.
Yeah. I'm reading Scott Galloway's book, Algebra of Wealth, right?
Yeah.
He's
Yes.
an NYU Stern professor, big fan. I love his podcast called Raging Moderates. And he talks about, he actually was successful as a young 26-year-old entrepreneur because he hired moms that basically were top of the game, but they wanted that work-life balance. They wanted to work from home. They wanted to be able to leave without feeling guilty about it. And he built an incredible company and then turned around and sold it, right? So do you try to build that type with the younger folks? We talked earlier about some of the folks who are on your team. Do you try and give them that work-life balance? And how does that work for you?
I can definitely start, and Alex. I think we've been humbled by how hard veterans want to work. Like when we built a company, we try to make sure it's like high barriers to entry. So we're really rigorous about who
Slow
joins.
to hire. Yeah.
But as soon as they join, we're not here to micromanage. Like Netflix, I think their books on culture kind of informed our take. When you have the right teammate, your goal is to empower and like kind of get out of their way. And most of the time, they're going to tell you what needs to happen. And we've been humbled by how little you need to shape that and how much you need to empower that. I think as a leader, you have a responsibility to help build confidence. But when it comes to management, I think that it's just as inhibitive at times as it is empowering.
Yeah, we have a team, a number of values, but one of our team values is letting people work really hard at work that matters. And to your point, you bring them in, you let them run. If we need to vector a little bit, sometimes we'll adjust as we learn on those hypothesis sort of learning cycles. But the goal is just to let them run.
One of the consistent themes that we hear on the show is that you have to find your purpose, because there's also in that concept of I don't know if Patrick and I actually agree with the concept of work-life balance. I think we kind of work with like in this concept of like work-life integration,
Harmony,
and like there's gonna be times, and you know this as well as I do, like you're scaling up because your tempo is gonna be really high because you got to do something, and then your tempo is gonna be really low because you're waiting, like the hurry up and wait game of the military. You actually said also that like you give your team something that they can work on that matters, which really talks to me about what is your finding your purpose and being aligned to your purpose.
Yeah.
So I want to ask you two questions about purpose. One, why does Parlay strike your passion? Like where does the purpose of passion come from that? Then how do you instill that in your culture to allow for people to work at the pace and tempo that you need to be as a startup? I think those are kind of two-part questions, but it really strikes to our first question. And the reason why I'm asking it is most of the veterans that we talk to really struggle finding their first passion after service. They also miss the camaraderie. They also miss the teamwork. They also miss all those things. So I'm really interested in your perspective on that sort of culture.
That's, huge. We both have personal missions and they tie in actually to our work at Parlay. So my personal mission is enabling access. This is my third company. Every company that I have built or been part of building has revolved around making sure that people who struggle with access to something, jobs, capital, whatever it is, that they get access. But I also think it's possible to do that in a for-profit way. It doesn't have to be solely in a non-profit capacity. So every business that I built has been for-profit. And in the case of Parlay, what that looks like is access to capital. And so our customer in that dynamic is actually the bank or the credit union that is enabling that access to the small business that they lend to. But for that to work, we have to deliver value to both sides. And while the bank or the credit union wants to enable that access, they also need to be able to drive more revenues, more efficiencies with that revenue, better data, better insights to allow them to say, okay, I know who I'm lending to, how to lend more efficiently, how to do so with the headcount I have now, but scale it, 10x over time with 90% less work. And so it's really tying all of that into our broader mission, which is unlocking the next $5 trillion in economic opportunity in the US.
And to build off that, I think a problem space I've always been fascinated by is unlocking trapped capacity. So we're super passionate about small business lending, but when you zoom out a layer, what you're really seeing is that the opportunities for growth within the United States is often constrained by capital access into underserved communities.
Totally.
And one of the things that humbled us is when you're looking at like above the waterline iceberg type problems. So when the Army short 50,000 soldiers for recruitment, and then you do the first level of 5 why analysis. It's like, well, there aren't enough educated or potentially fit or healthy American students. And you go down a level, what we end up seeing is like education outcomes are often tied to capital access within communities because that shapes the tax base that informs schools. And if communities can't afford food and you have food deserts, then there's health implications. And so where we got to as a team was realizing that capital access shapes enduring competitiveness and growth as a country. And if I'm at the bottom rung of Maslow's hierarchy and I'm worried about survival, I may be less worried about some of these like higher order problems. So if you can empower more people with access to capital so that they can take care of their families and grow in their communities, then you're raising the bar for the types of problems that people are able to focus on because they no longer have to worry about existential threats to them. So then a lot of these deeper, hard, complex, wicked problems, you have more people in the arena. And I think we're really passionate about how do we change the conversation between lenders who want to help these groups, but historically struggled with the absence of a technology like ours, and communities that want to build and create opportunity, but the pipes weren't working. By addressing that last mile connectivity issue, you can unlock tons of growth. And I think with that comes a ton of secondary benefits.
Yeah, no doubt. You mentioned recruitment that I can't help it because we talked about human capital management,
Yeah.
right? And so, when I was helping lead the Army, 120,000 Gen Zers, Gen Xers a year coming into our Army, but only 26% of young Americans even qualify. I mean,
Wow.
most didn't serve in the 101st Airborne Division like you did or at 82nd like I did. What do you think should there be like a national call for service, whether that's military, Teach for America, police, cops,
I think,
firefighters?
Yeah, I definitely don't have the answer. But I'd say like things to consider. One, it's worth highlighting the importance of connectivity. So when you think about the success of programs like Hacking for Defense, I think one of the things they do really well is offer exposure for populations that might not have had previous military experience to understand the opportunity to serve. And then I also think we're not doing arguably enough to make sure that people within the ranks today feel fully empowered and appreciated. Like there's a lot of conversation about military talent management and enhancing our capacity to look after the force, but it's worth remembering that the majority of people who serve are in families that have served. And we need to make sure that people feel so strongly about how they're being taken care of and empowered. And that's both sides of a military family, service member and perhaps those that aren't serving, that they're bringing more people in. And I think it's really important to make sure that we're creating an environment or ecosystem that is keeping pace with the talent management norms of current generations, the fluidity, the flexibility, the autonomy, that is allowing people to have breaks in service if they want to do something else, because the skills you learn on the outside can make you better in. So you don't need to have this binary industrial model of like 20 years and out. I think with permeability and increased focus on connectivity, and empowering those already in, we can have a lot more stickiness that translates then to much more impactful opportunities. But
Yeah, I mean, even on the front end, because we're going to break, but even on the front end, like you can go to McDonald's. Most young Americans think if they interview, 2 weeks later, they're going to get a job. Right?
Yeah.
They go fill out in their phones, McDonald's, et cetera. But it takes months and months to come to our military. Now I get it. You have to be physically fit, mentally right, all that. But that's just getting in the front of the funnel.
Yes.
And then when you're in that permeability, that hybrid, if you want to go back and go work in a private sector, come back in, I think it's incredibly important. We're going to go talk about this stuff. He's an expert in it. So we're going to be right back with more Warrior Money after this break. Welcome back to Warrior Money. We're joined by Parlay Finance's Alex McLeod and Jay Long. All right. We're hot and heavy on human capital management, about recruiting folks in, hybrid technology, hybrid, workflow, but
Yeah. So
next question.
So we talk about the military recruiting, like 79% or 70% of the same people come from the same families, even the same zip codes. And so in that, there's an inherent bias in where people come from. And what you're trying to do at Parlay is democratize and create diversion, equity, and equality and inclusion
for access to
opportunities
capital,
for access to capital. The inherent model of the way we've been doing things, the operating model, is risk aversion, standard procedures for accepting or denying. We've got shareholders that we have to answer to. We've got risk compliance that we have to do. How do you believe that you're actually going to democratize access to capital to be inclusive of other groups of folks?
Yeah, it's a phenomenal question. So right off the bat, you're correct. Our customers, the credit union or the community bank, they have to do things above board in a risk-adjusted way so that they can answer to their shareholders, and so that they can make sure that at no point they're putting their customers at risk. But historically, the systems that they've used to do that are legacy, very manual processes, systems that don't talk to each other. And so their ability to help everyone that comes into their pipeline is limited by the amount of time that they have, right? They can't. If I'm a lender and I have 100 people coming my way, I am, if it takes me an hour or 5 hours per, I might not be able to get to all of them. And so I think that, what Parlay is aiming to do is make it easier for lenders to win back time, in that we're cutting out the manual work for them so they can really see what every applicant's details include, what the viability of the loan is. But we're also doing two additional things. One is saying, hey, lender, you're evaluating Alex McLeod and Alex's pizza shop against one frame. But that's not the only frame that you need to evaluate her against. There are 10 or 25 or 100 loan products at the bank. You've evaluated her against one, and actually there's this other one that's really good for her, right? So that's a way to get to a yes without making them do additional work. The second piece is not every small business requesting a loan is ready. And that is a huge piece, right? Only 20% of small businesses get to a yes when they submit for a loan. And that's because many of them start from a position where they're not ready. And so the other thing that we have to change is helping those small businesses understand what it takes to get to a yes, helping them understand that here are the factors that are going to be evaluated as part of the application. It's not a transparent process right now. There is no data that can be called back to them to help them understand that, and we're the interface to do that. Because, and this is really, really important to your point about DEI, right? There are lots of small businesses that fall into the underserved category. Women-owned, veteran-owned, immigrant-owned businesses. Small businesses account for more than 50% of our GDP. This is not a small segment. That underserved segment is the norm, and we need to do better at giving them the tools that they need to understand how to get to that yes. And so that's something we're very passionate about.
Yeah, the other thing to build on Alex's point, it's worth remembering that oftentimes the first time a small business might engage with lenders is when they're applying for
When
loans.
they need it.
The reason that's a challenge is
Good point.
if you don't know
Yeah,
all
that's a
the
good point.
prerequisite work that you should be doing in advance, like if you're from a community perhaps that doesn't necessarily have long-time banking relationship and you don't have a credit score, like you need to know that early.
Or your
so
business
you
doesn't
can
have a
build.
credit score.
Yeah.
It's not just you personally.
Right.
So your business doesn't have a credit
And
score
so
either.
it's not just, am I a good business leader? Early in our discovery process, we came across fantastic business owners that were building great businesses that weren't able to communicate that within the lens that a bank might understand. So it's also helping them on their journey towards building a bankable business that's related to building a great business. It's a subordinate part of building a great business. But if you're not making sure that you can communicate to lenders in a way that they understand, then you're going to have really big gaps that need not be there. It's more of a miscommunication issue than it is a capacity issue.
But it's like turning up to a selection without training, right? Like it's just like that. And veteran business owners, actually veteran entrepreneurs, are very likely not going to come back and apply again if they get a no. And veteran business owners are incredible business owners, but if they don't know what it takes to get to a yes, we're precluding them from that access. And that means that we're not funding good businesses that can help us.
I mean, because I love the transparency and then some of the coaching. So I feel like with your product, it's like AI that you utilize is democratizing our economy, our businesses to get access to capital. Would you agree with that?
It's a fine line, right? AI is it's a hot button topic. A lot of folks in the space of banking right now see it as a silver bullet. Like AI will fix everything. And we have to be careful when we talk about that, because I do think that AI can democratize access to insights. But I also think that you have to be very careful with how it's used, what type of AI is used, and what guardrails we're putting around the use of it. Because just as we use AI to help a small business understand what are the factors they're evaluated against, and we help AI summarize for a lender what is contained within an inquiry so they don't have to manually do it. There's a risk in other use cases, not parlays, but there's a risk where AI could be used to exclude small businesses from consideration. And we have to remain as a whole field and industry mindful of the power, but also the drawbacks of tools like AI that are just applied without an understanding of the guardrails.
I think to agree with Alex and the point of your question, one of the things we're passionate about is changing the cost of risk in serving the segment. So to Alex's point earlier, absent of technology like Parlay, it's going to take so long to understand eligibility or fitness that it's very tempting to ignore the majority of loans that are smaller size, which means inherently you're removing huge percentages of the market. By shifting the cost of understanding, to Alex's point on insights, you also shift the break-even point on where lending makes sense, which means now you can be much more inclusive in the parts of the market you're considering because you fundamentally altered the risk cost. And so by shifting it from a binary to lend or not to lend into this more nuanced and sophisticated, should I cross-sell, Should I nurture this individual applicant? Are there other ways to get to yes? You're foundationally changing the way banks need to think about serving this segment. And the secondary effect then is you're ensuring more people get access to the capital they need.
This is rapid fire questions from Dan. He's going to ask both of you.
Oh my gosh.
What is the biggest parallel between military talent management and bank access to capital?
Learning to trust people that if they're given the direction and intent they need, mission command style, they're going to make great things happen. But you have to give them an understanding of where they need to go. And I think the more we can make transparent the end states we're all seeking to reach and the journey to get there, the more a small business owner or great soldiers are going to surprise you with how they do that.
What is the key ingredient to democratizing capital?
Data. So that sounds really simple, but the reason why small business lending hasn't been cracked yet is because we don't have data on the entire market. And so that's something that we're helping to build, is that base of data that lenders can then use to make better lending decisions.
Thank you very, very much.
All right. Listen, that wraps up our show. So listen, subscribe, and review Warrior Money on Apple Podcast or wherever else you get your podcast, or check us out at Yahoo Finance. I'm Patrick Murphy.
And I'm Dan Coons. We'll see you next week.